This is Real Estate 360. I'm your host, Steve Vazza. I have the pleasure of having Jeremy Freid from 128 CRE, a newly launched brokerage firm here in Boston. Welcome to the show.
I appreciate it. Thank you very much. Good to be here.
We have known each other for quite a while. I don't know you in your new capacity with your new company, and it's an exciting time for you. Great time to be launching a full-service brokerage company, and I'm excited to hear about it.
Yeah, no, thanks. We're pumped, and nice thing about it is we're so focused in our niche in the 128 market, leasing and selling commercial buildings, and we've been doing that for forever at our former firm, and now we're doing the same thing, just under our own niche boutique suburban brand. So
yeah, well, it's never easy to break out from a big great company and do your own thing. I mean, I know that from personal experience and and other things. So obviously, you've been at this a long time. I know you're originally from Chicago and other places. You've been in the Boston market. You personally for 16 plus years, and I know there are a group of you that came over, and you handle a segment of the market that as a real estate investor and developer, I love in the Boston market, which is that whole 128 corridor, the tech corridor, the pump of the economy in Massachusetts for years.
Sure.
Yeah.
So 128's been our focus up and down that Newton, Needham, Wellesley, pushing north up into the Burlington market and down south towards that Westwood, Dedham market, just being very focused in that market there.
So let me ask you, because we have some commercial office properties, and we have a portfolio of apartments and so on and so forth. But where do you see the growth coming from that's moving into these suburban office buildings?
Yeah, it's funny. I was in Austin, Texas a few weeks ago for this SIOR International Conference, and you don't realize how insulated Boston is. The demand, the fundamentals are so strong here, and the 128 market now is feeding a lot of the sort of growth from Boston, Seaport, Cambridge. There's a flight.
Is that because they're being priced out?
Totally being priced out. A lot of the flex industrial asset classes are the hottest asset classes right now. All those flex buildings are being torn down. You're seeing more density, whether that's Seaport, even in our Needham Newton market, you're seeing 6-story residential office being built where these single-story flex buildings were. So that's a huge opportunity area right now.
Well, I mean, one of the challenges, the good news is you're in the 128 market. The bad news is you're in the 128 market, right, and the lack of supply. It's tough to find, if you were going to develop something new, which I would love to do, finding the land for it is a challenge in and of itself.
It is, and the land basis is so high to make any kind of, between land basis and construction costs to build now is just so expensive. So you're seeing a lot of adaptive reuse. I mean, we're seeing flex buildings trading at 17, 18, 19 triple net now on a lease basis.
Wow.
So on a net effective basis, it's starting to sort of compete with the A- B+ office space. So.
Is that sustainable?
Listen, I think we all know, whether we're in the extra innings or we're inside the red zone. I think we're at a place in the market right now where we're closer to the top than we are at the bottom. So I think people that want to build on spec or go through a long entitlement process are being a little apprehensive given where we are in the cycle.
We're seeing that. I mean, I share your optimism. I think personally, I think we're in earlier innings than the latter innings.
Great.
I'm generally an optimistic guy.
Love your optimism.
Yeah, I think there are a lot of good fundamentals happening in the market. Yeah. And not being an economist, I just kind of go with what I see and what I know and what I read. But I'm generally optimistic, and I think that especially Boston. You and I were talking earlier, before the show, and I'm always proud to say that I've been all over the United States. I've been to all 50 states, multiple times. Can't think of a major city that I haven't been to. And it gives me great insight to exactly what we have here in the Boston market. The good, the bad, and the ugly. I mean, the good news is we just have some of the greatest universities, the greatest companies. It's a place that people want to be. We're on the ocean. There's a lot of fundamentals.
Yeah, I mean, growing up in the Midwest, being landlocked here is huge, right? I mean, you can't build east.
You can't build east. Yep.
And so you keep pushing west, and you go from the Cambridge to the 128 belt to the 495 belt. The fundamentals are strong there that with the Amazons and the GEs, and the fundamentals couldn't be stronger here.
Well, let me ask you though, what do you see happening? I mean, one of the challenges that I have when I look at commercial properties, let's say that traditionally a user may have been a 10,000 foot user or a 20,000 foot user. That same user by today's standards, because of all the products that we have, the iPhones and this and that user may outsource. You and I were talking about our Office Link shared office concepts. A lot of people are doing that. Do you find that people are looking for smaller spaces, or what's sort of the typical profile?
I'm just seeing flexibility now. All landlords need that flexible approach. These tech companies, these growth firms want that flexibility. The days of signing 7-10-year leases work for some firms, but there's a whole wave of tenancy that just comes in saying, we don't know what our 2-year time frame looks like, and for us to commit to a 5 or 7 year deal now is hard.
That's a horizon that just years ago, like you said, sorry to interrupt you, that was the norm. But now the horizons that these companies work on are so short. Like you said, they need that flexibility.
Absolutely. So, like your Office Link here with the turnkey space and, the build out in the cafe, and it's collaborative, it's got a good vibe to it. I think that's, on a smaller scale, I think it's going to become, look at the WeWorks and the Notels in Manhattans. I mean, it's just, it's exploding.
Yeah, it really is. Well, I mean, not to, digress into that, but, we have the shared office concept as part of, the Vazza platform. And what I like about it is, it gives not real estate, I take that back. It gives professionals in general that would work from home, which, years ago, it's kind of a taboo. Oh, I work from home. That kind of implied that, you didn't have a quality job or you quite hadn't arrived. Nowadays, there's so much outsourcing that people are encouraged to work from home, but a lot of people don't have the discipline to do it, or they want to be around other adults and have that type of interaction. So we see, at least I see an explosion in the shared office space.
Absolutely. I mean, whether it's a large company that wants to give their employee in the burbs a touchdown option, or it's a small company getting that entrepreneur who's got this patent and he's waiting for his first round of funding out of his basement into a collaborative environment.
We've actually had a couple of situations in one of our shared office suites at Office Link where the tenant came in, incubated, and then took space in the building.
Okay.
Yeah, which, hey, it doesn't get any better than that.
No, it doesn't.
Yeah,
it's a good scenario.
Yeah. So, what do you guys see on the horizon? I mean, I know we talked about where we are in the baseball game, but it's an exciting time. You guys just launched your firm. You've got a great name. Your colleagues, great reputation.
I mean, it's an exciting time for us. I mean, we just have no idea where the market's going. Obviously, we love to see at least a 2 or 3 more year run out of this, this marketplace. The cost of debt's starting to creep up there a little bit. I don't think that's enough to cause this huge chill on demand. But I do think people are taking their foot a little bit off the gas, being a little more prudent, a little more conservative.
I agree with that.
I think, when we bring a building to the market, I think the depth of our buyer pool is thinned out a little bit. We're still getting pricing. It's just the depth is not as, is not as aggressive as it was,
for sure,
say in 14, 15, and 16.
Yeah. Now, when you on the investment sales side, do you see the amount of foreign capital backing off a little bit, or is it,
So we're a middle market firm. We kind of play in that $2 to $30 million space. So, we don't see a ton of foreign capital, in where we play. But I'm hearing it from some of the, larger, sort of top 5 big firms downtown are saying that. In our space, it's the local and regional. It's the private capitals, the Vazzas of the world that, don't, some of them are syndicated and they're raising friends and family funds, or they've got a LPGP scenario where they've got to pay a preferred return. But a lot of guys in our market own a portfolio. They're long-term hold folks. They can be a little more aggressive on a higher basis buy because it's a long-term.
Well, they're patient.
Exactly. They have patient money. It's them and their family calling the shots. So they don't have to report to the LP investors. Right. So
yeah, we see a lot of that, as you mentioned, even in our own acquisitions. You want to be with the patient money so that you can just there's no tremendous pressure to exercise, certain options and whatnot.
Not to mention the paperwork, right?
No, it's a nightmare.
Yeah.
And I know that it's a deviation from the space that you're in, but we also see a lot of apartments. Not a tremendous deviation. I don't know how much of the multifamily you're seeing along the corridor.
Yeah.
You can't help but drive up and down 128 and just see a massive amount of multifamily going up.
Absolutely.
Yeah, I mean, they're certainly being pushed. I know that there's some speculation. We're always talking, people like myself, we have a lot of people come in, and there's concern in Boston. I don't develop in downtown Boston, so it's not particularly my wheelhouse.
Sure.
But there are some people that come in and say, we're concerned the multifamily in downtown Boston is being overbuilt, and then other people come in and say, no, there's a lot of runway.
Yeah, I mean, I sit on the Economic Development Commission for the city of Newton, and we're always looking at our housing stock and where we are, at our 40B levels,
right,
and what it does to the school systems and what it does to, the utilities in the market and the pressure on
just
water
the pressure
and sewer and all that. And so I think each municipality has to look at their stock. Needham's gotten really aggressive in the last decade with new housing permits, but I think everyone's being pretty prudent and kind of keeping their finger on the pulse of kind of where they are. But I think that if you're inside 128, that market, there's always going to be demand. I mean, these millennials at some point need to move out. Once they have kids.
Yeah. And you're pointing to our producer, a millennial, right?
Exactly.
Yeah.
I mean, so at some point, right? I mean, Watertown right now seems to be kind of the cool, trendier, low-cost option with some funky restaurants. But at some point, school systems become important, and and creating affordability in those communities that have those like top 10 school systems, or that's going to be sort of the rub, I think.
It's very well said, and it's very, very true. I'm about to start a development. We're going through some final permitting and whatnot, but it'll be about 220 for sale condominiums, okay. And it's in the 128 Beltway, and the beauty is, and what everybody gravitates to is, we're right on a commuter rail, within walking distance, and that whole live, work, play,
transit oriented,
the whole transit oriented. I mean, it's really the way to go, because what we're seeing is the so-called millennials. I talk to my brother often. He's got some young sons. I have daughters and whatnot, but his sons are at the marriage age and whatnot, and they're at the point where they either can't or don't want to pay the downtown rents, and you get dual incomes. They all do quite well. They may have one car, two cars, or no cars, and the fact that they can be on these transit lines, commute into the city, come home, come back to a nice condo or a nice single family home in the suburbs, which is certainly more affordable. It's really driving. We're seeing on our residential side some of the best sales activity. Knock on wood, if I could, we're seeing some of the best sales activity that we've seen ever.
That's great.
Yeah.
Yeah. I mean, I think if it's hard to go wrong with transit. I mean, it checks the huge box that we're once that's checked. Then you go to amenities and you go to school systems, but that transit box is huge for employees, for companies looking to hire talent, for young millennials looking to stay close to the urban core.
Yeah. Well, you guys have really you've been very disciplined. I've known of your colleagues in their former professional career, sure. And you've really put an all-star team together. Yep. And but you've remained disciplined to the fact that you know your wheelhouse, your sandbox for the time being. Yeah. Okay, what you do later on, but you guys have really focused on that 128 corridor, and I just think that that's a tremendous place to be.
We all live in these communities. We have young families there. We sit on economic development commissions. We're just immersed. All the buildings that we represent are just in this little space. So we took the sort of be an expert in something, bring value to your clients, and bring go a mile deep and an inch wide in a space that you can really bring value that no other firm can.
Know it inside and out. Yep. I really appreciate you coming on. Your insight into the local market, that 128 corridor, and a wider berth than that. But that specific knowledge, it's very refreshing to talk to somebody that really knows the space like you do. And we appreciate you coming on.
I appreciate you having me. It's a pleasure.
Thank you.